Welcome back. We have Aditya Suresh now joining us, Head of India Research and Strategy at Macquarie. The market, of course, is in for a weak start, and then we'll take it from there. Aditya, good morning. Prashant just highlighted the point that the Indian market premium, valuation premium over MSCI, is now at some kind of record high. But your thoughts on the kind of outperformance that we have seen from Indian market and whether that can continue?
So good morning. Thank you for having me on the show. To Prashant's point, I think the strength of the Indian market and the resilience has been something which has surprised us all. In terms of the where India is trading at today, we're at roughly about 18 times 2-year forward earnings estimates. And if you think about that, premium versus EM or premium versus world, yes, we've always been expensive, but today we're still sitting at about +3 standard deviations above normal. So the valuation context remains challenging, right? But I think within this entire setup, if I take the same story back, say 6 months, 6 months ago, we were speaking about a similar kind of valuation premium. Today, however, we're feeling a bit more, let's say, confident in terms of where we're at, in terms of some of these risk factors. So like 6 months back, again, what we're thinking about is margin risk on the downside, right? Whether it be consumer or IT. That we actually got reflected in the numbers as well. Inflation was a problem. Commodity prices was a problem. Higher cost of capital was an incremental kind of headwind. A lot of those factors have kind of already kind of expressed itself. So incrementally, some of these risks are maybe less relevant than what it was 6 months back. And some of the cuts to the base in terms of earnings is already in the base, right? So whilst the valuation backdrop is full, some of the risks which we've been speaking about, that's already kind of largely expressed itself. So whilst we're not making a big call that India is going to rally, now say 10% from where we are today, we do expect a fairly range-bound market. We are remaining bottom-up and fairly selective. Some of the broader aggregate risk factors that has kind of receded in fund flows, right? So like if you take the net foreign outflows in the 9 months up till June, it's about $35 billion of outflow, right? From India. And then in August, we've seen, say, $6 billion worth of inflow coming in. On a broader EM ex-China kind of inflows about $11 billion. So India's seen a fairly strong kind of bid back from a kind of EM fund flow perspective as well. So Anuj, I guess the key piece was that, so yes, valuations are full, but a lot of the risks are actually starting to get reflected, and therefore incrementally we're feeling less bearish than what we were feeling, say, 6 months back.
Aditya, I know it's it's just one day, but my question is about one day, which is on Tuesday, the market that we saw. I'm sure that you guys were also watching in awe what was happening, right? The way the market went up. About $500 million worth of cash buying happened, as data tells us. Any sense of what that was about? I mean, I'm sure you guys would have discussed it internally. Did you see flows of that at your on your desk? I mean, anything you can tell us? Was there any allocation, new allocation, foreign allocation to India? Just some color, if you have, will help.
So it's something which we are trying to attribute as well, and hindsight can be, and we can kind of come up with these answers. But quite frankly, it did take us by surprise. The strength of India in a kind of broader backdrop, which is weak. Now, apart from generic kind of comments about kind of rebalance flows, etc., we don't have much more to kind of give you here. So I think it was probably related to kind of rebal flows, but not much else. I mean, so at least we don't have a clear answer on that.